Hey everyone, and thanks for jumping back into the Cryptoverse. We are going to continue our collaboration series. We have another special guest with us today, Tone Vays. He's actually been doing this stuff longer than I have been, one of the true crypto or Bitcoin OGs, I should say. And it's always a pleasure to have him here. Tone, how are you doing? Can you hear me, Tone?
I'm good. I'm good. I don't know if that was my audio that was doing double or on your side.
Yeah. Sorry, I think I think I got something fixed over here on my end. But yeah,
Is
I
that
just want
still coming from
people.
me or you?
What?
Is that
Well, I think we are having some technical difficulties,
hold
but
on?
it might just be a delay or something. So what I'll do is, Tone, I'll give you the floor to just sort of talk here a little bit about the markets. I can pull up your charts and stuff. So feel free to just sort of go in. Where do you think we are? Maybe start off with Bitcoin because I think that's what people are most interested in right now, and we can take it from there.
Sorry. Why am I hearing everything twice? I'm trying to figure out where the problem is.
I think it must be on your end because it's not on my end.
It has to be on my end, but I don't know when it could be on my end. 1 second. Is it in StreamYard itself?
No, do you have the YouTube video up somewhere?
Oh, it's probably coming from Twitter. You're streaming to Twitter. That's what it is. I didn't know that. Okay. I had no idea this was being streamed to Twitter. Okay, that's my bad. All right, I solved the problem.
Okay, all right, cool.
Because I couldn't see the tab. Like it just was my Twitter tab. Okay, we solved it.
All right. Well, why don't we do this again? All right, guys. So this is Tone Vays. He's been doing this actually longer than I have. He is another person who will also frequently tell you why your altcoin will probably bleed against Bitcoin over the macro scale. And I think he's a great guy to follow for sure. So make sure you follow him, subscribe to his YouTube channel. He's got a website down in the description below as well. So make sure you guys check out those links. He's a good guy. He provides his opinion on the market, raw, unfiltered opinion, and that's what we're here for. But Tone, how are you doing today?
Good. I'm down here in Panama. I don't know how many people from your audience have been to Panama. Is great. I lived down here for about half the year, and yeah, just finally back in an office working. Got a couple of conferences coming up, and continue to keep up with the market. Still doing my daily videos, mostly geared to educating people.
Hey, that sounds great, man. I know we had you on the stream, or we had you on the channel a few months ago, and I know I went on your channel as well, and I'm curious as to what your outlook on the market is right now, because Bitcoin has taken a bit of a hit here recently. And I know that the last time I think I spoke with you, you were sort of drawing out two potential paths for Bitcoin, one a little bit more optimistic, one a little bit more pessimistic. Do you think we're at the point where we're more so following the more pessimistic route at this phase?
Yeah, 100%. Let's go over the screen share. Do you have my longer term chart?
Yeah, we got it up right now.
Okay, cool. Let me put that there. So in the beginning of the year, I drew out two paths. My more optimistic path was going to be a triple top sometime this summer, followed by an extended pullback into the halving, followed by the back end of the bull market. We clearly chose the other path, and the other path was going to be a slow up grind into the halving, followed by a little bit of a dip, followed by a longer and extended bull market to make up for the extended bear market on the front end. And so far, my month of September was anticipated to be a range from 25,000 up to 33, and we're on the bottom half of that range. So far, we are following this purple path. I'm not going to say perfectly. Maybe if I would have, slid this over by a couple of months, it went perfectly, but it's good enough. And around April, that's when I was fairly confident it's going to be a slow, frustrating grind into the halving.
So are you pretty much expecting mostly just sideways price action with some occasional moves higher and some occasional moves lower between now and the halving?
Yeah, pretty much. And I really find it hard to believe that we would be breaking $40,000 before the halving. Maybe we'll break 40, but very unlikely to break 50. But even 40 is going to be a struggle. Even after the halving, we can go back down as low as 25 or 30. I don't like double bottoms. That's the only thing. Like mentally speaking, I have a little bit of a contradiction right now myself, where I didn't really like Bitcoin going to the $25,000 level because it creates a double bottom. And for me, double bottoms are meant to be broken to the downside. Is it always going to happen? Of course not. Is it going to happen more often than not? Yes. So because of this current double bottom situation, my weekly chart is on an MRI buy, which is my indicator. I tweeted out a couple of days ago that, hey, watch out for this week. I'm expecting this week to be a potential reversal this week or next week. And I was saying that over the last basically 10 days, this week or next week could be a good reversal. But at the same time, I was also pointing out this was my projection of how Bitcoin can move at the end, from the end of August. When I usually draw these arrows, I don't move them. Like if people go back to these videos of August 22nd on my channel, they'll see these arrows. And I am expecting Bitcoin to bottom somewhere in the low 24,000s, maybe even 23 and a half. And while it is on a weekly MRI buy, saying that this week is a potential reversal, the week's only 12 hours long, right? The week literally just started. So we still, and we already fell close to a. So going into this box by the end of this week or early next week is totally reasonable. And the reason why I have this box is because it will remove my mental contradiction that I'm anticipating a rebound off a double bottom, which I never do. I either need a higher low or a visibly lower low without it approaching the prior lower low. So I'm okay with Bitcoin rebounding from 22 and a half to say 24, because it'll give me that opportunity between the two lows.
If Bitcoin were to take out, say, 24.8K, which is the June low, it would actually be following kind of like what it did in 2019, where it took out its June low. It put in a slightly lower low, and then it bounced back up. Like if you go back all the way to 2019, it did something very, very similar. And it actually corresponded basically on the day of the death cross, which is occurring tomorrow. In fact, it sort of put in a slightly lower low, and then it bounced back up, and then ultimately put in a lower high. Do you see that? Yeah, do you see that? It occurred, yeah, like in that sort of that drop in that September,
right
October.
Here.
Yeah, but even before, yeah, right, exactly, right there. It took out that June low and then rallied back up in September, October time.
Are you talking about this specific candle right here?
Yeah, but you see that wick on that candle, how it took out the
Yeah.
June low? Yeah.
Yes.
And then, but
it's
still
interesting.
Yeah.
I know. I can tell you exactly where I was as this was happening. I mean, this happened almost in a single day within the week. If we zoom down into the daily chart, we were actually at the 2019 financial summit in Bali having dinner in a beach cave happening, and people were like freaking out because the internet wasn't all that great inside a cave. So this was super interesting. It's the same exact thing, actually. You're right. I was looking for this week to be a potential reversal in the market because of the MRI. And at the same time, I was expecting a clean lower low because I hate consolidations. And everything happened this week. Unfortunately, it wasn't able to sustain additional upside. But this was certainly a week of, just like my tweet 24 hours ago, before all the volatility this week in the last 24 hours, basically already calling for this week to be a similar week of interest.
Yeah, well, and let's suppose that we take out that prior low at 24.8 and then see some type of short-term reversal. Do you think it would just be a lower high until the halving? Like, do you think there's a good chance it could actually take out the summer highs this year, or do you think it's more likely to just be further consolidation below 30K before the halving?
So I can certainly see it taking out the yearly highs, but it's still going to struggle in that $34,000 range. So if anything, it's going to look more like, like one of these patterns. I'm not a huge fan of this pattern, but it could look something like this, where I would still be concerned for, let me make these arrow stickers. I have too many of them. It would be something like this, and I'll make it, specifically visible for our current stream, and then maybe even take out the low before the halving or right after the halving, scaring the shit out of people before the inevitable breakout. This is kind of unlikely. It's more likely that it would give the illusion. It's more likely that it would give the illusion of a breakout followed by a higher low, followed by the back end of the real bull market. That is the more likely scenario, but I wouldn't rule this wide mouth pattern out.
Let's go, hypothetically speaking, I mean, if we saw what happened in 2019, but in 2015, once we started going down in Q3, we just ended up double bottoming almost immediately. If we go below 24.8 and there's just not a bid, and we keep going lower, below 24.8, below 23K, what do you think people should look for as like the next level of support? Because again, like, I mean, when price moves, it can move quickly. You can go sideways for 3 months and then everything happens all in a single day. If I know your base case is that we sort of, we end up getting a bounce off of it. But if the bid doesn't come, are there other support levels below 23, 24K that would be of interest to you?
No. And even right now, I'm stretching a little bit with my numerical level. Let's go back to the current situation. I'm going to drop all of these drawings I just did to clean up the chart, and I'm going to make it super clean on that end. My concern is that there is no of support for me at this point. The only reason why I'm even entertaining a numerical support of 23 to 24,000 is because of the proximity to current price. At this point, because we've already broken the prior swing low, I don't have any price targets. All I have is time targets. There's two. There is time and there's price. As Force says, only a complete fool will try to predict time and price. Most traders stick to one or the other. Some traders are, looking for time patterns. They're looking for cycles, and they're more time-based. Other traders are more price-based. Hey, I'm looking for the price to bounce at price X or top at price X, and they don't talk about time at all. I like talking about time and price. But trying to pick them both is very, very difficult. But because we are taking out the prior swing low, officially, I do not have any price targets. My price target would be a lower low in the $11,000 range, okay? And that means I need to zoom out all the way to this line here, which was the prior swing high back in 2019. It was the double top versus the 2019 top in the summer, which double topped versus the August 2020, and then it created this giant cup and handle situation. And you can choose your top. You can choose the swing top, which is 13K or 14K. You can choose the candle close, which is closer to 11.5. Price-wise, that is my only price target. So my other targets have to be things other than price. So they have to be time, which is based on and the MRI is on an MRI buy right now on a weekly scale, but I'm giving it 10 more days because I just wanted to establish a lower low. Also on a weekly scale, there's a very critical moving average right here. This is our 50-period moving average, which is coming in at around 24K. So I'm only choosing price targets because they are super close to what is happening right now. But on a longer term level, I do not have any price targets, only time targets. Or if I use, say, on-chain analysis with certain metrics, but I'm trying to stay away from price analysis for downside targets because technically they don't exist. These lower lows are too close to each other, and unless you're directly smacking between them, you're too close to the next one, which means I'm more bearish.
Right. So if we do take out those lows and don't get any bounce, then all the other prior support levels are arguably too close to each other. Sorry, I'm kind of sick. But I mean, I think that reasoning makes sense. And so you would more so be looking at time rather than a specific price at that point if we were to take out those lows.
Right. Or looking at things like moving averages. I haven't looked at Fibonacci's in a while. Like, it has to be other metrics. It's not price level, support, resistance levels. My last official price level support was right here at 28,000, 27.5, 28, where it was being supported by the daily and the weekly.
I think maybe we lost Tone. I think he sort of froze over here on my end. So Tone, I don't know if you can hear me, but hopefully it'll come back here in just a couple of minutes. Let me see if I can find him over here.
Sorry, Ben. I think I had to reset my internet. My internet connection went out. I just reset it real quick.
All right, yeah, fine. Yeah, I think it just cut you off like mid sentence, but
okay, well, so that was a fast sentence. I'm just saying that yeah, once we broke the 27,500 support, I knew that Bitcoin was in serious trouble. It broke all the daily moving averages, including the 200. It failed a higher swing low at 27.5. Everything was just set to be bad. I anticipated a rebound back to retest the breakdown levels. It happened in a single day, a little bit later than I expected, but it didn't change the overall condition of Bitcoin. GF news.
Fair enough. So this is your view on Bitcoin. Do you have any other views on, say, the rest of the cryptocurrency asset class as a whole? Because Bitcoin can move very differently than everything else.
I am pretty much bearish across the board on all other altcoins. I can pull up my altcoin list. I mean, some are, I can dig in on some of them, but it's going to be hard for me to find a bullish looking altcoin. Even Ethereum has generally been weaker than even I anticipated. Let me make sure I'm using the right area. Wow, the S&P just bounced. Saw that?
Mm-hmm.
Cool. And it's not even taking Bitcoin with it. So even in my Ethereum outlook, even I anticipated Ethereum to be a little bit stronger right now, but I do think that it's going to go down significantly. Once again, I drew these patterns as far back as early this year. Expected Ethereum to also consolidate. This is Ethereum versus Bitcoin. That's how I look at all altcoins. I'm anticipating Litecoin to have another 80% drop like it always does, following each halving of Litecoin. After every Litecoin halving prior to, it's dropped 80%. I don't see why it would be different this time.
Against Bitcoin.
Against Bitcoin, yes.
Okay.
And with all the problems of Binance, they are about to lose very critical resistance level, which should set it significantly lower. Everyone's talking about Solana right now because of the FTX situation. The Solana chart versus Bitcoin is actually holding up really well, but there is a very bad level of support here with this double bottom. And once that breaks, it's approaching its final support at 0.00038 Bitcoin, which was the top of August 2020. And if it loses that, its ultimate path is to zero.
Yeah, I mean, it's sort of this discussion of like which altcoins become a relic of a cycle and which ones actually bounce back up in a following cycle. Most of them just sort of bleed against Bitcoin forever. And I mean, I know
I
you
don't
talk about
I don't think any altcoins that had a top in the last bull cycle will ever bounce back to the top. I don't think it's ever happened. Maybe it's happened once or twice, but will there be altcoins that are skyrocketing 1000x? Yes, of course. Will they be altcoins that profited on in the 2021 bull cycle? The answer is absolutely not, unless they happen to be things that no one's heard of back in 21. So yes, there'll be hype, but not in the coins that people have on their watch list. It's going to have to be all new, fresh blood.
Do you think one of the reasons for that is some of the older coins just have a lot more baggage associated with them that create a lot of resistance levels? Or do you think it's just people are more attracted to whatever the new shiny object is on the block for the next cycle?
It's neither of those, actually. I think the real reason is because in order to pump your coin, you need to basically have influencers and you need brand new hype. And everyone that already coins, they've already exited and they're not going to go back to repumping a coin. They know it's very, very difficult to repump. The only people promoting the old coins that were popular in the last bull cycle are the bag holders that bought them from the profit makers. And it's the profit makers that were able to get that coin up and running with its pump through Telegram groups and all this stuff. So people that are still promoting old coins are the bag holders in those coins, and no one is going to help them. They need to get on the next train sooner than later. And like all of these, other YouTube promoters, new YouTube promoters, and there'll be new algorithms, and they only care about that pre-mine. And you can't pre-mine an old token. Like you're not going to get free tokens of an old token because the money has already been made.
I mean, look, I think that's a completely fair assessment. And it's sort of like the brutal truth that a lot of people don't want to hear. But again, I mean, the altcoin market has been in a downtrend against Bitcoin for a long time now, and it will probably remain in a downtrend against Bitcoin for some time to come. Tone, you mentioned when you clicked on the charts over here, you mentioned that you saw a little bit of a bounce here in the S&P 500. I would like you to provide some insight into where you think the S&P is going. I know you have been pretty bullish on it. Do you think it's going to continue this rally into the end of the year? What are your thoughts on the S&P?
Right. So I became a big bull on the S&P. It's probably one of my better calls in the last few years. I became a huge bull on the S&P literally in early October. If I flipped it, and I'll explain why. If I flipped it a monthly chart, on a monthly chart, October was going to be the candle once again of my MRI indicator, which also didn't call the top perfectly, but it nailed it within a month, basically. I would have been already checking out of the S&P right here. It was a double consecutive in November of 21 than it could have been back in February. Cutting out again? Okay, I'm back.
Yeah, I think we hear you.
Sorry, I wasn't sure if our connection dropped again, but I think I'm back. I'm back, right?
Yeah, you are.
Ben?
Yeah, you're back.
Ben?
I can hear you, Tone. I guess you can't hear me.
Ben?
Potentially.
Ben, I'm back.
Yeah, I can hear you. I can hear you. Just go ahead and keep talking.
Okay, cool. So anyway, so I was looking for a rebound. The S&P was on a moving average on a weekly scale. It was hitting an MRI reversal. And September is historically one of the worst months ever for the stock market, historically. And October is one of the best months in the market, historically. October is also usually when the final lows are made after a downturn at the end of the summer, which is also S&P historically. On a weekly scale, once this chart converts, on a weekly scale, going back to that October, we also had very critical moving averages, also the MRI as well. So I've been a bull publicly from this area. And I remained a bull all throughout. Yes, there was a bit of a correction in early this year, or I guess going into the summer of this year, sorry, not early this year. And I was a little bit concerned in March of this year, early this year, but we were able to rally. I stayed bullish because I had positive capital, because I've been bullish from a lower low, I was able to stay bullish a little bit longer than most. I remain bullish here. This is an insanely bullish looking chart to me, where potentially could take out the 18 months highs later this year or early next year and rally to new all-time highs. Now, I am a little bit concerned that on a monthly chart, we are on an MRI top, but MRI tops...
I was about to ask you that.
Yeah. MRI tops don't always lead to full-blown corrections. My default view of an MRI top is a 1 to 4 candle correction. And even on a daily scale, if we now go daily, we just had a daily MRI top right here. And I was looking for a 1 to 4 day correction. Once the MRI loads, there it is. I was looking for a 1 to 4 day correction, followed by a potential reversal. And we see 1, 2, 3, and the third day turned us around. Now I am bullish. My stop loss would be the swing low. And I am looking for a breakout of the prior swing high. But if we flip back to the monthly level, and turn is more having me consider that the rest of the year is going to be a consolidation. So I am looking for that 1 to 4 candle correction more as consolidation, something we haven't had. We didn't really have consolidation on the last MRI top, nor the one before, as we kept going further. And on a monthly level, it's really hard for the S&P to consolidate for multiple months in a row. But potentially something like this, where we also had an MRI top, and then we went up a little bit, and down, then down. So this was consolidation, followed by higher prices. That also was more like a consolidation. So I am looking for some consolidation here on a monthly scale, followed by a breakout sometime next year. It sounds crazy considering those that watch my channel know my political views. And I'm not, let's say, a fan of the current Biden administration, but I think they will do everything in their power to pump the economy. They have been buying up the Strategic Petroleum Reserve, which is helping drive oil prices higher right now. That's the daily chart. Here's the weekly chart. And on a weekly chart, this giant candle right here, the August 28th candle, the Biden administration bought 800,000 barrels of oil. So I keep track of this every single week. Let's wait for the spreadsheet to load. The Biden administration earlier this year sold a total of 24 million barrels of oil. But over the last 5 weeks, they have purchased 3.5 million barrels of oil. This makes no logical sense whatsoever. Why would you sell Strategic Petroleum Reserve early in the year only to buy it later in the year? Buy it back. Makes no sense. But in the midterm right here, I have it by year. Last year, the Biden administration sold 221 million barrels of oil during the critical month action, which was right here. So starting in the summer, starting in June, look how much they were selling out of the petroleum reserve. And they stopped a month after the election, or they significantly slowed down right after the election. So going into the election, they sold 145 million barrels in just 4 months leading up to the election. Okay, so they are adding more to the Strategic Petroleum Reserve, creating a higher price for oil, only to then dump it on the market next year in time for the election, and then using the fact that Biden is dropping prices for the summer of 2024 at the gas pump. That's what I'm anticipating. So I am looking for oil prices to go higher, and then next summer, price will probably be lower, but I don't know if the price is going to be able to come down below 80. But they're going to try to drive it down by depleting the strategic reserve as much as they can. So people need to be aware of this.
If oil continues this rally, which, I mean, it seems like there's a good chance that it would if this continues to play out. But if it does, do you think that that is going to then, raise CPI and therefore lead to a more aggressive Fed that would then make monetary policy more unfavorable for riskier assets? Like, are you concerned about that at all, or does that not really factor in?
No, it is definitely a factor. I am anticipating oil prices to raise the CPI number. However, in a CPI chart, and that is the CPI. One of CPI's components is owner equivalent rent, and that is the cost of someone paying for a house that they've bought if they were to rent this house out. And right now, there is a huge gap between the rent that people pay and the amount of money people spend on a home if they own the home. And this chart has gone crazy in the past. This is not the highest percentage difference it's been. The percentage was way higher in the 80s. And I believe the percentage was even higher here in the 90s, because this number is wrong by this chart. Unfortunately, I spotted it after it was tweeted. We didn't make this chart, but Visual Capitalists kind of screwed up. This number here is about 600. And so it has diverged, especially back here. But the cost to buy a home will probably come down, because with these high interest rates, a lot less people are willing to sell their home to buy a new one, mortgages. And the high mortgage rates are making it challenging for people to buy homes. So the only way to equal that out is for home prices to come down. So you saw what happened back here in the 80s. We also saw what happened here in the 90s, where home prices actually crashed. I'm not expecting the home prices to crash like they did, but I am expecting more of a repeat of the 1980s into the 90s, where the cost to buy a home would drop and go up and drop and go up and consolidate until the rent price comes up. But the CPI uses these numbers, the owner equivalent rent. So the owner equivalent rent will likely negate the CPI for the oil prices raising the CPI. So I am expecting the CPI to stay in that low 3% area, and perhaps as low as 2.8, and hover in that 2.5 to 3.5 area for the next several years. So it will stay above the Fed's 2% mandate. And that's why I'm also anticipating that the Fed will ultimately raise the interest rate to slightly above 6% and keep it there. I don't expect them to raise the interest rate this month, but in November, they are likely to raise. In December, they may take it easy. And then January, they'll probably raise it again. So once the Fed gets the Fed funds rate to 6%, they will be happy with that, even at an inflation rate of 3%. They will say, we don't want to raise the interest rate anymore. It's already double the inflation rate. We don't want to cause more harm to the economy. And that's where things will stay for the foreseeable future.
Right. I mean, normally when the Fed starts to cut, it's almost like it's too late, right? They left it too high for too long, and therefore they're forced to sort of go back the other way. I am curious about your views, because I know the last time I spoke to you, we spoke a little bit about the dollar as well, the DXY, and I believe we've both been fairly bullish on the dollar for a while now. Are you still bullish on it? Do you think this rally actually still has legs in it, or do you think it's due for to go back down?
No, I remain very bullish on the dollar. Again, some people may think this is a contradiction, because I am bearish on the United States and the government of the United States, and I don't know what the next election holds. There are a couple of candidates that if I see them win the U.S. presidential election, I would be then bullish on the U.S. economy and the United States, but I don't think it's going to turn the Titanic of the ultimate American collapse towards the end of the decade. But until it gets to that collapse, the DXY and the dollar are mostly measured against other Western currencies. And even when it's not measured against the Western currencies, all fiat currencies are terrible. This is why I am incredibly bullish on Bitcoin. And I'm even very, very bullish on gold as well. We can talk about that after. So in terms of the US dollar versus other fiat currencies, especially the euro and the British pound, I am incredibly bullish. So when I say I've always been looking for the US dollar, the DXY, to reach unprecedented levels. But at the same time, this will not deter gold and Bitcoin. Some people think that when the US dollar rises, that's bad for gold, or or it could be bad for Bitcoin. I don't. So I can see the US dollar doubling in value in DXY, breaking 200, like crushing all-time highs of the DXY. And at the same time, Bitcoin is sitting at several hundred, $3,000 to $5,000. It's just that I'm expecting to destroy other fiat currencies, especially the Western fiat currencies. And if the BRICS do come up with some kind of a commodity-backed currency for international trade, the dollar would get destroyed against that international currency, which might as well be Bitcoin or something backed by gold. I challenging for these countries to do it. I still think that, the US dollar is probably more transparent and more trustworthy than, say, the Russian ruble, the Brazilian real, or the Chinese yuan. But overall, I am way more bullish on the BRICS future than I am on the US future. And it is independent than the strength of the dollar, if that makes sense. At the same time, I don't expect any foreign countries to continue to trust US government and government bonds. And we've already seen Russia doesn't hold any American debt. China has lowered their debt from 1.3 trillion or something like that down to $800 billion worth of US debt. And they're continuing to deleverage and they're not buying more. So what is China doing with the money? Well, their economy ain't exactly growing crazy right now. They're having their own economic problems. So it's not like they have a lot of money to spare. But when they do have money to spare, they're putting it into gold. They're keeping it in their own currency. They're going to, throw it into investment. They would rather invest in their own people than invest in U.S. government bonds. So the burden of holding U.S. government bonds is now falling on U.S. allies, like other Western countries like Japan and Europe, and mostly in U.S. pension funds and other entities within the U.S. Now, the U.S. may own all this debt to itself, but that doesn't matter. My biggest ultimate fear is that the United States will not be able to pay its net interest component. That is the one part of the U.S. government's debt sheet that is going to grow exponentially. And I talk about this constantly as well as a major, major factor. Don't know how much time we have to get into it, maybe on another dedicated stream because it probably needs it. And even if the U.S. government owes the debt to itself, if it can't pay it, that looks terrible on the international and domestic market, and it's basically a default. Even if you borrow money from your own 401k and then unable to pay that money back to yourself, you are in a default to yourself. And there is regulation that's going to penalize you because you are supposed to pay back the money to yourself, even if you borrow it from yourself, if you do it for tax advantages, and you're going to get penalized for that. But if you borrowed money from your own 401k and you can't pay back the money to your own 401k, you are effectively broke. So what are you actually going to do in your future? So when people say the U.S. owes the debt to itself and what's the big deal, it is a huge deal.
Well, in this scenario, what would just stop the United States from just printing more money to pay that debt in the first place? Like, why can't, do you think that they just won't be willing to do that?
Well, again, printing, this is the problem. That's actually a great question. This is the problem. And I don't have a chart to show it. Maybe I can look for Martin Armstrong's chart. It's an old chart. But the thing is, the U.S. can't print money. The U.S. borrows money into existence, right? We like to say that the U.S. is printing money for simplicity, but it's not. The U.S. borrows money into existence. And now that the interest rates are significantly higher, borrowing money into existence will only create a bigger burden to pay back the money. So printing the money it's illegal, right? The founding fathers might have been the last set of Americans who understood the catastrophe of exponential growth and interest. And they probably assumed erroneously that if they forced the Treasury, if they forced the federal government to borrow money into existence, as opposed to simply printing it, they would also understand that borrowing money at interest is an exponential growth curve that would lead to the collapse of the country. And unfortunately, every single politician we have is pretty much a lawyer that doesn't understand economics. And they failed in government from printing a bunch of money by forcing them to borrow it. And now they're borrowing an infinite amount of money, creating the exponentially growing interest on that money.
Okay. I mean, interest rates were, I know the debt to GDP is obviously higher now than it was back in the 70s and 80s, and we also had really high interest rates back then as well. Back in the 70s and the 80s, debt to GDP back in the 40s was pretty high. And I know interest rate, for me, it seems like the most likely outcome is just to keep doing the same. And I guess you're saying that even if they keep doing the same, they can try, but it won't be successful, is what it sounds like you're saying.
Right. See, I don't like the debt to GDP comparison. When they say debt to GDP, there is a great chart. It's on page 183 of this report. Right here. This is the debt to GDP chart, and the government is projecting this all the way out, which is insane. But the problem isn't the debt to GDP ratio, right? Like GDP debt is, you're able to quantify debt. You owe, like right now, the US government owes about $1 trillion in interest on their total debt, right? We can go to the national debt clock. National debt clock. Right? And you see the number. You can quantify this number. Okay? You can quantify the national debt. You can quantify how much money the US government collects in tax revenue, right? I am a little confused how GDP numbers are being quantified. Okay? And this debt is almost at 33 trillion right now. I really thought it was closer to 34. This thing must have dropped somehow. I'm not sure how. And we know how much interest the government owes on this. This is a quantified number. Like you know what this number is. So once the amount of money that needs to be paid on this debt is greater than the amount of tax revenue that the government's collecting, who cares what the GDP of a country is, right? You can't pay the bill. You don't have enough money. Like the GDP of a country, like it's just such a weird metric where, for example, government employees are a positive in a GDP metric, but that's money the government's spending on salaries for the government. The health sector is like more expenditures in the health sector is additions to GDP. So the more unhealthy your society is, the higher the GDP of that society. Like the GDP metric is the most convoluted, most useless metric to me because I like quantifiable metrics. I know how much I'm making, I know how much, and I know how much I'm spending. So I don't really care what the percent of GDP is. I care about how the hell is a government gonna pay all of its employees plus a $2 trillion bill on only the interest on the national debt that's accumulating. And I don't know how the government intends to fix this problem. It's not a fixable problem. It will lead eventually to the split and the default of the United States.
Well, that is definitely a bold statement. I mean, sorry, my voice is still going, but Why don't we, in the interest of time, because I don't want us to go too long, and we're already at about the 45-minute mark. In the interest of time, could we briefly go over your views on gold? I know you mentioned briefly that earlier, but might be useful to pull up the chart and to at least provide your opinion on it before we try to wrap things up.
Yeah. Oh, one last thing. I don't know if you noticed that GBTC discount is now all the way at just down 17%, and it's happening in a short-term bear market. So the moment there's FOMO in the price of Bitcoin, I'm expecting the GBTC discount to evaporate and approach zero, as I have been all throughout this bull run since the beginning of the year. Just one last thought on the crypto markets. Now, for the gold chart, we need to really zoom out. Here, we need to look at it on a monthly scale. And on a monthly scale, to me, the current consolidation and frustration in gold, to me, is similar to the move of gold between 2008 and 2009. So this one is a little bit longer, and you can see how we eventually ended up pulling back to approximately these prior highs after gold doubled in price. Let me double check that statement. Yep, 90% up. So doubled in price. So I am looking for massive breakout sometime later this year.
Tone, I think we lost you again.
Taking gold to approximately $3,000, and then probably pulling back some more. Bitcoin's going to do better than gold, but gold, I believe, will do better than silver. Now, while gold is about to break out from its all-time high and potentially go 50% above the all-time high, if I was to pull up a silver chart, or I'll pull up two charts, low chart layout. I'm going to do ratio, gold-silver historical ratio, and silver chart. Silver is nowhere near its all-time highs. In fact, silver has only double topped, pretty much double topped. So while gold is going to reach 50% above its all-time high, silver will, go 100% up. So silver will have a better return from this point, crack the all-time high. And then gold is going to pull back to the prior all-time high, while silver is going to fall 50 or 60%. I am of the belief that silver is no longer a monetary metal. Only gold is. Gold has still historical view as money, but not silver. So therefore, I expect the gold-silver ratio to go to a new all-time high. I had this view before the last time gold-silver ratio went to a new all-time high around 120. I think it's going to crush it. I think the gold-silver ratio is going to go to like 1 and above. And the days of the gold-silver ratio coming back to 30 or its geological level of 17, 18, I don't think that will ever happen again, because we're not going back to a silver standard. Some countries may use gold to back their currency, but they'll never do it with silver. The only reason silver was ever a financial asset as money is because you couldn't scale gold to micropayments. But in today's modern digital age, if there ever is a gold standard, it's going to be a digital gold standard. So what's the point of silver? It's literally like Litecoin to Bitcoin. It is Litecoin is the silver to Bitcoin's gold, basically, but it's useless. It's Bitcoin. So while silver is a real functional, as far as silver being money, it is a shitcoin compared to gold because it's just not needed. Your gold will buy you a loaf of bread because it will be a digital representation of gold that scales to micropayments, which is something gold couldn't do back in the Roman times, but it can now.
Okay, so yeah, I mean, I think that was your view before. So it's still, in general, you're more bullish on gold than silver, and the expectation is that you expect gold to be breaking out probably sometime before the end of the year.
Yes.
All right. Well, we've covered the markets. We talked about Bitcoin, we talked about altcoins, we talked about precious metals and the dollar and the S&P 500. Guys, if you're not already following Tone, make sure you do so. Links to all his stuff is down in the description below. Tone, I'll leave it to you though to sort of provide any type of final comments about where people can find you, that sort of stuff.
Sure. We're organizing an event for traders, money managers, hedge funds, family offices. It's called Financial Summit. It's going to take place now in Dubai. It's through Dubai, beautiful location. Please look over the website. It's called The Financial Summit. We have a YouTube channel as well. Soon we'll be posting content on there. Right now it's just Twitter Spaces and highlight videos from the event. But eventually there'll be educational videos and videos like this. Hopefully Ben will come and join us on that channel as well as a guest on the markets. There's also a Bitcoin conference coming up in Las Vegas, a little closer to home. And that's going to take place December 7th and 8th with a poker tournament denominated on December 6th. That's called Unconfiscatable. Please follow us on social media. The Financial Summit Twitter handle just tweets out research and information on the markets pretty much all day, every day. This way you don't miss like when the CPI calls are and all other information. So follow us there. Unconfiscatable has a handle. And of course, myself, Tone Vays. This is my Twitter as well. Probably the best place to follow me, along with all of the social media as Tone Vays. Please be careful with my imposters. I have an infinite number, just like Ben. If you ever see a message from me asking you for money, that is not me. That is absolutely a scammer.
Yeah, it's true. There are a lot of imposters out there, and people do have to be careful for sure. But anyways, Tone, pleasure to have you here as always. I believe this is the second or third time you've been on the channel. Again, pleasure to have you here, and thank you for providing your outlook to the market. Again, guys, if you're not subscribed, make sure you go subscribe to Tone. Links are in the description below, and we will see you guys next time. Bye.
Thank you.